Hello and welcome to Finextra. I'm Emily Horler and I'm here with Neil Jeans of Thomson Reuters. Thanks very much for joining me.
Thank you for having me.
Given your experience in the AML space and in particular KYC in recent years, what do you see as the current KYC challenges for financial institutions, their clients and the regulators?
The challenges have evolved over a number of years, primarily predicated by the FATF 2012 changes. They are being taken up by regulators around the world, and that is driving regulatory change. And regulators are struggling to do that in a business-friendly and pragmatic way. The financial institutions are also struggling with the huge burden of regulatory change and also the ongoing costs that incurs, and also the client engagement and client satisfaction that unfortunately increased regulatory burden can impact. The clients ultimately are suffering because they are being required to provide significant more information, and also they are experiencing significant delays in opening accounts and the ability and time to trade.
So how are financial institutions identifying and managing money laundering and terrorist financing risks, in particular sanctions risks, and what issues do they currently face?
So sanctions risks has been a significant focus in recent years with the major fines that have occurred. Risk and the understanding of money laundering and terrorist financing risk is a key pillar of the FATF 2012 requirements. Financial institutions are trying to understand their risks more deeply and to draw risk inferences from the data they have. Unfortunately, that is sometimes in very limited data, and there is a significant drive in the industry to increase the amount of data they have. But that ultimately comes with challenges around managing that data.
Ongoing due diligence is a key focus around the world. What are the current practices and what developments do you see in this space?
Again, the FATF 2012 is driving changes in the industry in this space. It's a key requirement that came in, which is being brought into legislation around the world. So it's a key focus for financial institutions. Traditionally, it has been, most financial institutions have done periodic reviews. So 1, 3 and 5 years, they refresh the customer data. Financial institutions now are looking to see whether they can refresh their data or identify changes in that data in the interim period, i.e. between when they onboard the customer and the next refresh. In order to do that, they're looking to identify different sources of data, the ability to tap into wider sources of data to identify those changes. The big challenge is actually managing that data once they have it, and obviously then ultimately drawing the inferences from that.